Tally, thank you very much for ushering us in. And I'd very much like to thank my esteemed colleagues, fellow panelists, and attendees for joining us today. As highlighted in the description of the event, today's discussion will be centering around disruptive technology and exposure through public funds. As we've all seen, 2020 through 2021 has witnessed one of the largest financial revolutions in recent memory. And I think we can all agree that Bitcoin was a keystone to that event, surpassing $2 trillion in market cap, with other key milestones felt across the digital asset sector. Now, I think while growth should not be taken lightly, this maturation has largely occurred in the sandbox of the crypto industry, and other decentralized vehicles have become more exposed and have garnered further interest within the investment sector. To reach the next pinnacle of adoption, I think public funds are becoming more and more accepting around the digital asset class. And with that in mind, I'd like to introduce my panelists. I have James Haft, CEO of DLTX, Andrew Kiguel, co-founder and CEO of tokens.com, and Jason Fernandes of the IBC Group. Now, gentlemen, I'd like to take a look at what digital asset exposure through public funds will look like over the coming year. I'd like to chat about our current bottlenecks that we're facing that are slowing down the build out of this institutional on-ramp, and what we can expect in terms of developments as our industry becomes more accommodating to the broader investment community. So with that in mind, I'd like to start off with getting some general opinion with respects to ARK Investment recently filed for a Bitcoin ETF, the 12th such SEC filing. I'm curious, James, being in the public markets now, what key adoption and regulatory drivers do you think are needed in order for the SEC to finally approve public institutional instruments such as an ETF, bond, or a similar product into the market?
So, I get asked this question so often, and I think that the question is based on some faulty assumptions. First of all, it's based on the assumption that the regulators want there to be a Bitcoin ETF or a crypto ETF, which I don't believe they actually do, because if they did, we would already have one. And so people think that the regulators come up, have hearings and think about things, and they go through processes and they come to, Solomonic kind of decisions, which isn't actually how politics or regulation works. What happens is they decide politically what they want to do, and then they spend the rest of their time coming up with the reasons why they decided it to justify it. So my belief is that the institutional acceptance, the regulatory acceptance and political acceptance of these products is not actually going to happen in the way that people are sitting around and asking for. I don't think that the industry needs more regulation to grow or to get mass adoption. I think actually the system is set up in a way, and the technology and the desire of the global population is to create ways to communicate with each other on a peer-to-peer basis without regulatory interference, and to participate in a new structure where we can get rid of the political aspects of how you hold your money and how you transmit and who you talk to, and go back to where people are free to communicate with who they want to and how they want to. I think, having said that the way that this is going to happen is that there's already ETFs for Bitcoin and for these products that are on global markets and on decentralized markets. And so what's going to happen is that the regulators are slowly realizing that they're losing their control, and that this game of just saying no isn't stopping the world from changing and moving on. And so it's going to take the moment when they realize that it's almost too late, or maybe it will already be too late, for them to accept the technology and accept the concepts so they can maintain control over it, because that's their main objective, is to maintain control over finance, not necessarily to harbor it or to advance it. And so I think it'll happen as the legacy regulatory options become more and more compelling and grow bigger and bigger and get more and more liquidity and suck more liquidity out of the legacy systems, that over time the regulators will realize that they need to make accommodations, otherwise they're going to completely be out of the game. And I actually think that's going to happen over the next 2 years.
Andrew, I'm curious what your perspective is on things, having sat across various positions within the public and private sector over your career, both on both sides of the boards, really, from both the investment banking as well as directorship, public and private. Where do you see the regulators and the institutional community coming to a somewhat reasonable understanding that gives us the next plateau within the space?
Yeah, I think some of what James said is accurate. I mean, you had Van Eck, which is one of the largest.
At least a little bit of what he said.
Yeah, a little bit of what he said. But Van Eck, I think, was the first to put in an application with the SEC in the United States for an ETF back in 2018. And Van Eck, for people that don't know, this is like a large fund manager, several $billion. They might be the fourth or fifth largest fund manager in the world that put in this application. You had the Winklevoss brothers from Gemini put an application, like legitimate companies looking to create ETFs that have all been declined. And what I thought James said, which was very astute, is if the regulators in the US wanted a Bitcoin ETF, they would have approved it already. And at this point, it's delay after delay after delay, more applications. Maybe we need green Bitcoin in the maybe it's got to be physically backed. It doesn't seem to matter. I think from what I've heard in the sort of back years, that they're going to continue to defer this for a while. But back to your question, like, what do I think about this? Is one of the things I find curious is that we need a Bitcoin ETF. And that's, I think, part of the discussion for this, which is Bitcoin is probably the easiest thing in the cryptocurrency world to buy if somebody wants to set up an online wallet and do it. And if you look at the fact that there's still such demand for the Bitcoin ETFs, talks about maybe a little bit of the intimidation factor that investors feel in going directly into the crypto world to access these products. And I think that's where I merge my background, as having been a banker for a while, as well as an entrepreneur with public companies, is to show, like, why do we need the Bitcoin ETF? You saw in Canada, when they launched the Bitcoin ETF in Canada earlier this year, billions of dollars flowed into that within 48 hours of the first one, which was the purpose one being launched. And then within 2 weeks of that, there were another 3 or 4 Bitcoin ETFs that launched. That just tells me, if there was ever a Bitcoin ETF, number one, it tells me that, on a worldwide basis, there's a whole bunch of people that are trying to access not just Bitcoin, but crypto, and prefer to do it through a public company where it's easy, the money doesn't have to move, they don't have to convert fiat into crypto. And that if one was ever approved in the United States, you might see, a massive amount of money flow into the space from people who are sort of intimidated to do it directly.
Yeah, having seen myself as CEO of Secure Digital Markets in Canada and the provincial regulators here, the OSC, make a move and provide notice of their opinion, I find it interesting, the continuous resistance towards these public vehicles, because it's clear that the retail market and the institutional market are showing further interest to gain exposure to this asset class. And I find it paradoxical that the regulators continue to stifle this type of highly regulated vehicle while yet allowing, the kind of general retail market to enter, through the likes of a Coinbase and otherwise. So interesting to see how this will continue to shape up, and hopefully we'll find, to James's point, definitely, I don't think anyone within the industry is looking to see further regulation, but I think some real life leadership from a public sector regulatory standpoint would be nice. And I think that's something that we'll continue to strive for. And I think we might, touch on that later with regards to James and his foray into the European and Scandinavian public markets. But in the meantime, look, we've seen a lot of analysis done on an institutional level in terms of where family offices and institutions seem to be going. And in a recent survey by Nickel Digital, we see 80+% of institutional investors and fund managers attest to the fact that they're looking to increase their digital asset exposure by 2023. And as the industry prepares for this influx, I'm wondering what you gentlemen think are the type of instruments that these investors and managers are going to be most interested in. I mean, are we looking at, various indices continuing to become established? Are IPOs such as, the likes of Coinbase going to continue to drive this, or are ETFs and bonds? And Jason, I'm curious as to where you guys are seeing things in IBC Group and where you anticipate the interest coming through.
Sure. I think there's a huge opportunity, particularly for ETFs, the much wanted Bitcoin ETF that people keep talking about. There obviously is a certain amount of a massive amount of interest in that, but I also think crypto indices, or essentially portfolio companies that are going public, essentially tracking a certain industry, like the NFT industry, which is what we're doing at NFT Tech, for example, or the DeFi industry, there's another stock, DeFi, which is doing something similar. So I think these offer a little bit more diversification. So there's actually fund managers that'll be like their clients are telling them, look, we want exposure to Bitcoin, and literally what they'll do is just sort of open up and just buy some Bitcoin, like on the retail market. But having a certain percentage of your Bitcoin is one thing, and then sort of having a diversified portfolio, which would like a portfolio company like NFT Tech, where you have like multiple different companies that are representing effectively the potential that a certain industry brings. That is a lot more it's a lot safer for a lot of investors than to just invest, let's say, solely in a Bitcoin ETF. It's a lot more diversified. The risk is more diversified. So I think that's a really good opportunity.
Yeah, Andrew, I'm curious, as you've continued to direct tokens.com and your current listing, I know you've been entertaining a lot of various institutional strategic partners and investors who have been kind of at your front doorstep. Where are you seeing them push towards in terms of general interest, considering your kind of combined background?
Yeah, well, I can give you an actual example. So when we were doing sort of the IPO for tokens.com earlier this year, we got a surprising amount of institutional interest, and the largest technology mutual fund in Canada came in and wanted to be the largest investor. They actually went to their compliance department and asked, how much of this company can we buy? And I went to them and I said, well, what's the interest level to take such a large position in tokens.com? And they said, because you guys are staking Polkadot, and in the staking of Polkadot, you're going to own a whole bunch of it. I said, as a mutual fund, as large as we are, we love Polkadot. We can't buy it directly. It's not in our mandate to do that. We can only invest in public companies. And you're the only public company we're aware of that is holding a large amount of Polkadot. And thus, we want to own a big piece of you. And when I look at things like that, and there's been all these articles that have come out recently. There was a JP Morgan article that came out, or a report that came out a couple of weeks ago, talking about staking, getting up to being a $40 billion payout for stakers in the next couple of years. And that's going to be sort of supercharged by the move of Ethereum to Ethereum 2.0. And so for us, it's providing these things, I think, that get the institutions excited, but that they're not allowed to access directly. That's kind of been how I view it. I can go, going back to Hut 8, which was my prior business that I co-founded. When we started Hut 8, which is one of the largest Bitcoin miners in the world, we had zero knowledge or interest in the actual mining of Bitcoin. The genesis of Hut 8 was a bunch of people sitting around. This was before ETFs and funds, and saying, how do we create a public vehicle? Having been in the banking, every day I would talk to people and say, how do I get access to this stuff, but I don't want to open a cold wallet and figure out storage? I said, why don't we create a miner that's regulated that just holds its Bitcoin? And that would give people that exposure to Bitcoin. And that was the genesis of that idea. So I think the way I always look at things is I say, what are exciting things that are happening in blockchain? And how do you create a vehicle to make those available to people in the public markets?
Yeah. James, I think you've
Jamie, can I add on to that?
Please.
First?
Yeah, absolutely. Okay. Please.
So my background is emerging markets investment banking, and I ran corporate finance for Bear Stearns in Hong Kong and took public the first company in China to list on the New York Stock Exchange, right? And that was 1990, and we were doing the same thing for China and for Chinese equities that that Andrew just explained what his vision was for Bitcoin. So one of the things that happens is everyone thinks that crypto is different or Bitcoin is different, but it's not. It's just another asset that needs access to public liquidity. And to do that early on with new products and blue ocean opportunities, you need to tokenize the opportunity so that it fits within the filters that the regulators have for the public markets. And so what you do is you create fictions in ways that allow the investor to hold the same thing, something that looks like the same thing that they held everywhere else for all their other investments. So it looks like IBM, but underlying, you've added 2 layers of transactions or of transfer, which enable you to get from the asset which is not eligible to the asset which is eligible. So, for instance, in China, in 1991, it was illegal for Americans to hold Chinese assets, and it was illegal in China for Americans. So both sides, it was illegal. And we took the shares of a company that was in China. We put them into a BVI holding company. British Virgin Islands had treaties with the United States, with China. And then we took the Chinese, the BVI stock, we put it into a trust in the United States at Mellon. And then we sold depository receipts against the U.S. Trust on the New York Stock Exchange. So we basically were able to take the Chinese asset and list it on the U.S. exchange, but neither the U.S. holders nor the Chinese investors had any privity to the other market. And that's really all that's happening here with crypto, is that as we started the first question, when are we going to have an ETF? When are the regulators going to do it? This is what I was talking about. The market will find ways around the regulation, and the speed at which that's happening and the tools that people have at their disposal are accelerating and becoming deeper and more liquid. And that's what's going to force the regulators' hands, is that they're going to be afraid that they're going to be left behind.
So yeah, with that in mind, and I think we're kind of seeing a recurring theme here, right? The market is continuously trying to access something that the regulators are either not willing to move their hand towards, or that the industry itself kind of gets in front of itself. So with the most recent IPO of kind of wide acceptance, being Coinbase, we continue to see FTX increase their sponsorship and exposure across the US with interesting regulatory potential outcomes. Where do you gentlemen see the next big vehicle coming from? Do we see this as becoming kind of a tech play within the space? Are we anticipating, and I think Andrew made it clear his perspective, that the regulators have declined the numerous number of submissions regarding an ETF. So, a couple of things have been removed from the table, so to speak, by process of elimination. Where is where's the smart money lying on the next big vehicle to come to market?
I would say it's go ahead, Jason.
No, go ahead, Andrew, please.
I would say the most exciting thing happening in blockchain and in finance is DeFi, decentralized finance, which is the ability for people to conduct things like borrowing, lending, trading directly with each other without going through a bank. And the opportunities to make and create yield and revenue there are huge. And I think, you go to some of these websites and, the DeFi websites, they're highly complicated. I mean, you see numbers and pictures and things all over: Uniswap, Pancake, Cake this, and Sushi that, whatever food out there, becomes a DeFi app. And I think the simplification of that and access to that for public markets investors is next. You see a ton of money being poured into the DeFi space from investors all over the world. And, I think that combined with staking, stable coins, and the activity happening there, my view is that public market investors are looking at this stuff on the sidelines and feel like they're missing out, and that the real opportunity here is to create vehicles that give them access to that in a simple way.
Yeah. Jason, being outside of North America, I'm curious as to where you see the sentiment lying. We kind of tend to live within the bubble here of our our investment bankers and market trends that kind of come within kind of waves. I'm curious, from the outside looking in, but being deeply involved within the industry, what is your perspective here as to sentiment and the next wave?
So I think one of the so Andrew mentioned DeFi, and I think that's excellent. Mr. Wonderful, Kevin O'Leary, is setting up a company called WonderFi, where he's sort of like investing in multiple different DeFi companies. So that's sort of along the same lines that you were mentioning, Andrew. But also, I think NFTs are going to be really a big wave, because NFTs can represent any number of different assets. You have NFTs that represent real estate, fractionalized real estate. You have NFTs that represent SAFs, like literally SAFT agreements in equity investments. You have other NFTs that represent collectibles. And so sort of that, like, exposure, you can buy, like I mentioned earlier, you can buy Bitcoin, but you can't really have exposure to the variety of different NFTs. Not just us, there'll probably be other companies that come do something along the same lines, but you can't buy that exposure to multiple different kinds of use cases for NFTs and have that collateralized, that risk collateralized the way you could when it comes to looking at the NFT industry and public funds entering the NFT industry.
Absolutely. So, look, I think that we're continuously seeing market kind of the ebbs and flow within the market, act as in a normal investment trend. And with institutional exposure further increasing, where do we see adoption continuing to go? I've seen a huge trend towards NFTs, and we've seen the market really across a wide number of intersections come together and provide a lot of interest, both on a retail, institutional, and also deeply entrenched within the art community as well. So I'm curious, James, as you've seen the likes of NFTs and possibly one of the largest single sale events happening in Q2 for an NFT and across the digital art world and the traditional art world for that matter, how do you see the likes of something like NFT crossing the borders and creating further adoption? Where do you see that creating institutional understanding of product? Because I think, I've had the question asked to me probably about 100 times, what is an NFT? But with institutions taking this outlook on them, how do you see something like that increase in our exposure?
Usually in the emerging markets, the early adoption and early use cases are not actually the long-term important aspects of the new asset or the new opportunity. And I think that's true in the NFTs. What happens in these as these things adopt in the blue ocean cases is that in the beginning you have too much. When people get interested, in the beginning you have too much supply but not enough demand because nobody knows what it is. And then all of a sudden the demand kicks up and the supply can't match it. And so you get unjustifiable long-term prices, or prices which are not sustainable on a linear basis over time, which may be proved out later through trends in time. And then you have a fall in the valuations and the prices as the market starts to create more supply and the demand wanes a little bit because people start to question. And then you have a long-term process which starts to be like a stair step going up if the market can prove itself out. And I think that right now where we are in NFTs is that first fall in value after the initial excitement, and that people are kind of looking at it saying, okay, it was exciting, it was new, but what do I really have here? What really is this NFT thing? My belief is that the relevance of NFTs is not digital art, and it's not art itself, because we already have art and we already have digital art, and you don't need NFT to transmit an image over the internet, right? I mean, we've been doing that for 20 years already. So I think the value of an NFT is going to prove out in the long term to be the data and the metadata that carries it, and the ability. So what NFTs are going to turn into is a distribution methodology, not actually the art themselves, but an infrastructure that allows liquid movement of ownership, and allows metadata for attribution, and enables us to create more interesting models for how original creators are compensated, and how they, historically, the art world has screwed over artists until they're tremendously successful later in their lives or dead, right? And that we can now change that through NFTs, where you can build into the provenance the ability just to royalty sharing, and have the artist benefit from the from the increase in value of art over time, and as well as the early smaller galleries that play a very important role in discovery, but have tended to get locked out of the market once the artists get more successful. So I think we're going to see the NFTs, and then I think the art. I think everything's fractals, and I think that other industries are going to represent and look like the art industry. So automobile ownership, collectibles, coins. You're going to go even gold and silver. All these other assets. You'll be able to change the way that they're held, change the ways that they're moved, and change the ways that you can realistically create economies and benefits for the different participants through smart contracts, which can obviate the incredible friction and negative aspects of the legal system that we have currently for moving assets.
So, James, thank you. And I think you've kind of highlighted what I believe is a great path to watch. I think it's interesting to note the, early adoption use cases really varying quite dramatically from where we actually end up within an industry. As we look to slowly summarize our panel here, I'm curious what everyone's perspective is. As we've seen a wide range of SPACs launch over the last 18 months, redemptions, coming to market, a huge play of M&As and IPOs. The industry has, within the financial sector, been heavily reliant on human resources. Do we see a move within public funds to become more automated and streamlined as they integrate this type of technology and use case? To James's point, the continuous adoption and then kind of revamping of the use of this type of technology has been a continuous thought process and then adoption within the industry. So are we seeing a streamlining of implementation of blockchain across the financial services sector? Andrew, I'm wondering, have you seen from your relationships in past till now, some of the major players within the industry, beyond just talking about investment and making money from it, are we seeing real life adoption within the industry of blockchain as a whole?
I haven't. I think that there's certainly an inclination for people to do that.
I appreciate that, because I don't think I have either.
Yeah, I think there's been a lot of talk. make in 2017, when the investment banks started talking about blockchain, there was this whole we can make trades happen instead of doing T+3 and then which moved to T+2 to finalize a trade on the stock market. We can do it instantaneously, 10 minutes, and it will be done. And blockchain is going to be the exchange killer. Hasn't really happened. Things are still being done the old way. And in terms of banking, you sit around and we can eliminate wire transfers and use stable coins and transfer money all over the world, and we can do it for $1 and do it within 10 minutes. Companies are still clinging to the old ways. I think Wall Street is excited about DeFi and NFTs and all the things going on in the banking industry is, haven't seen a lot of it put to real world use yet. I think there's a lot of exploration going on. Haven't seen the impacts to be, and that's my opinion.
Jason, quickly, what are your thoughts on adoption here as we start to wrap up?
Sure. I think actually it will actually start revolutionizing the way funding happens, because particularly if you see if the way sorry, I got distracted. This thing came up, but yeah, if you look at even private sale rounds, so there's a whole bunch of launch pads, crypto launch pads that are actually completely revolutionizing how people are getting private sales filled up. Almost always, launch pads are basically fulfilling the criteria that used to take care of private rounds, and now that's actually transferring to seed rounds as well. There's a bunch of launch pads that are actually tackling the seed area. So I think it's only a matter of time before you start getting into how public funds is gonna it's gonna start affecting public funds. But I think the promise of blockchain and cryptocurrency and smart contracts is about automating these things. I think we'll get there sooner or later.
Well, the luster hasn't gone from Jason's eye and the shine there. James, I'll give you final word. Where do you see our adoption spike happening over the next couple of years? Where are your eyes following towards trend and internally within the industry?
I think it's going to be driven by demand pull by people who are being charged by their bank for the honor of having the bank hold their money and pay them no interest. And that you're going to see that people follow the path of least resistance and would rather have more rather than less. And what's going to happen is that the thing that's holding us back right now is primarily user interface. Because as long as the users need to know that it's blockchain and they need to know which chain it's on and they need to know anything about any of the technology, then you're really limiting yourself as to what percentage of the population in the U.S. and in the first world and globally, will be willing to participate. A, out of fear, and B, out of just not, lack of understanding. So as we resolve down to you just pick up your iPhone and you press buttons and lights go on and off, and you don't need, I don't need to know which database Chase uses to get upset with them when I'm trying to do my withdrawal, right? And there's no reason for me to know what database, what platform my app is using to give me my 10% yield. So I'd say once it gets resolved down to layer 3, which would be that aggregation on top of layer 2, where I can basically just use apps that look just like all the other apps, then you'll see a takeoff because those platforms will have an advantage of being faster, cheaper, more secure, and more flexible. And so they will win out because they will have better attributions from a use case perspective by the users. And I think that's really the path that adoption is going to take.
Well, gentlemen, I want to thank you very much joining me from 3 distinct locations around the world in various time zones and making time for our attendees to enjoy some insight and knowledge from within the industry. I hope all of our attendees have enjoyed hearing some of these perspectives. And gentlemen, I'll thank you again for joining and look forward to our next panel and further conversation. So until then, hope everyone has a lovely day. And I'm going to hand the microphone back to Tally Friedman.
Thanks, David.
Thank you, David.